Hi guys, I'm Chris.
And I'm Jimmy.
And we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week and share our journey with you guys. So Chris, I think for this episode, let's talk about the last few picks that we had and also how the market is treating us.
Yeah.
I have predominantly focused on energy stocks and financial stocks.
A little healthcare.
Yes, and right, a little bit of healthcare. Got some Pfizer, and then one of my recent additions is CVS. Overall, they have not been doing well for me.
Yeah.
And then on your side of things, you're a little.
Yeah, I'm pretty diversified. I'm in
Yeah.
I'm in almost every sector at this point, at least a little bit. So that was kind of my whole strategy.
Right.
Recently, I got Edison International, which is a utility stock, and then I bought BHP, which is a material stock.
All right. Let's look at how my side is doing. I am down. The market is up, but my portfolio is down.
Yeah, well, that's one of the downsides of not being very diversified, right? Yeah.
Right. Yeah, totally missed the tech trade. Bank stocks are down. You know, I bought them when they were even more down. So I think they're a little up. JP Morgan's my biggest gainer. Bank of America, a little bit. Charles Schwab, right? Remember, I bought them when they were really low.
Yeah.
You know, that's been holding up a little bit, but my energy stocks have just been like dying.
Yeah.
You know, I'm just like putting more and more in there, hoping that there's going to be a recovery at some point, right? Some point before we stop doing this, or you know, before we cash out, they're going to rebound. Okay. And then your side, you're holding us up, man. You're holding us up. So you have quite a bit in the green. Your biggest gainer is AMD.
AMD, I got the tech.
IBM, also
yeah.
tech. And IBM, I loved it when we got the IBM in our portfolio because I thought it was like, you know, an underdog tech choice.
Right.
And then also a very good dividend player.
Yeah, and that has proven to be true.
Yep. And I think it's just gonna keep gaining us. You have a REIT in there.
Yeah.
Realty income. I'm curious how that's gonna go by the end of the year.
Yeah,
you know?
I am too. I think I might get into another REIT also, one that's a little bit different types of real estate that they invest in.
Yeah, cool. All right, let's talk about some of our recent purchases. Let me talk about CVS. Know a little bit about the pharmaceutical field. And so you probably know that CVS is the biggest pharmacy in the US.
Yeah, they're bigger than everything else, and they also own a pharmacy benefits manager. They also own Caremark, which is an insurance company, so they're in several different sectors. They recently acquired One Medical, which is like which is like part of a medical group. Right. So as far as I know right now, they're trying to achieve vertical integration. So essentially, you come to them for everything. You have their insurance, you go to their doctors, you go to their pharmacy, everything kind of like Kaiser Permanente is.
Yeah, they're obviously still in that process
Yeah,
of
still
integrating,
in the process,
right? So, you know, I think this is a bet that they're going to succeed, right? Because if they don't, then they're probably just going to split up into like various parts or something like that, or sell
off certain sectors of it. Yeah.
But look how bad the graph is, right? Like they are near their 52-week low.
Yeah.
This is horrible. But I think the good thing is, look, in the last like few months, they've sort of like petered out, you know? I think they're sort of like hit their rock bottom.
Right.
I don't think there's anyone who can get more negative on them. I read in the news recently that Walgreens, I think they're closing down a few stores, which is, I'm hoping is good sign for CVS, or as in like they'll get more of that share.
Yeah. I think CVS is closing some stores too. I think all of the pharmacies right now are going into efficiency mode. Even the pharmacy that I work at now, they're all really trying to cut back. They're probably getting rid of the less efficient, less profitable stores, and they're trying to make sure the ones that they have are more efficient because they got a big bump from the COVID vaccines, and they don't have that anymore.
Yeah.
So they're trying to, and usually once flu season comes around, which is kind of towards the end of the year, like October and November, that's kind of when they make a lot of money because they have a big increase from the flu vaccines and traffic they don't normally get in stores.
Yeah. So, you know, like, I was thinking about like the flu vaccine. Also, I think that the COVID vaccine is probably going to be one of those regular vaccines. There's like the RSV thing that's coming out, and I'm not sure if that's going to be like a one-time or a booster every few years, or if that's going to be something that you get every year. I'm not sure, but I think there's probably going to be more of these flu-like vaccines that you kind of get every year. That's just my guess.
Yeah.
And then I think the other thing that I was like, okay, I think CVS is going to be a good bet, is that it takes forever to see your doctor these days. Right?
That is true.
Yeah, it's just like absurd, and it's not like you're waiting that long of a period, and then you get some substantial benefit from your doctor, right? This is kind of like your annual thing where you kind of just like check up, make sure you're healthy, right? Right, or like you need some like refills on your meds, right?
Yeah.
And it just takes forever to see your doctor.
Yeah.
And I don't know if like CVS has the answer. I just kind of feel like there is this space that, like, oh, a healthy person like you or me can get some sort of like benefit that I feel like CVS is like trying to like get into. They're not trying to replace like a surgeon, right? They're not trying to replace, a doctor when you have like tons of needs, you have tons of morbidities and stuff.
Yeah.
I just feel like for the healthy Joe that needs something like a vaccine, something like maybe a sleeping pill, like something small like that. I feel like that's just like so, that area is just like so ripe for the taking.
Yeah.
And I feel that like CVS is like trying to get there with their vertical integration.
Yeah, it seems like they are, and that's probably a really good decision. I mean, traditionally, pharmacies have kind of focused on the geriatric population. Obviously, older people are on more medications, so you would think that you get more profit from them. But also, they do change medications a lot.
Right.
They have a lot of trouble with their insurances. They can't afford their medications sometimes. So there is a lot of work that goes into taking care of a geriatric population. Whereas a younger population where, maybe you're just on a blood pressure medication, or you're just on maybe like an antidepressant or an anti-anxiety medication. Like you just have one medication and that's all you need, and it's very simple. Getting in and out very quickly would be good.
Yeah.
And if you can make that process much more efficient than it is right now, which I can say 100%, it is super inefficient.
Right.
Very, very inefficient. It does take a very long time to see your doctors. I mean, teledoc has kind of made that a little bit easier, so you don't have to go to the office anymore. And I think it is going to move much more towards that, like video, seeing your doctor or your provider through video, and then being able to contact the pharmacy a lot easier, not having people having to constantly be on the phone, just making the technology more efficient within the pharmacy. So I think vertical integration will help with that a lot, because when you work with the doctor and you're not having to call back and forth between the office, and you get the nurse and the doctor's with the patient, so they can't talk to you, so they have to call you back, and then call you back, and then you can't answer, that you're just playing phone tag all day. It's ripe with inefficiencies. So there's a lot that can be changed. There's a lot of potential upside. I would agree with that.
Yeah, and this is that play, the play that there's something there that's missing, that I feel that like just like a few small things can really change what CVS means to people, as well as really help people, again, just like healthy people with minor needs that don't want to wait 3 months to see a doctor. And then my other pick, Enphase. So this is a company that I've been following quite a bit. And I think my understanding of this company, that this is sort of like the NVIDIA of solar energy, right? So they have great technology, they're everywhere, but recently their price tanked because with the higher interest rates, people are buying less solar panels because a lot of people need financing for those.
And they
for
can't
that technology.
acquire it right now, or it makes it even more prohibitively expensive.
Right. So anyways, that kind of like tanked their stock. The other was that there's some changes in California's law regarding the energy grid. So I think before, when you had solar panels and you didn't use all of it, you would put it back into the grid, and they would pay you a little bit more.
They don't do that anymore?
And I think they reduced the amount or something. There's some reduction in that. So anyways, so their price just went down. So again, also a stock that's near the 52-week low. This is like an energy play, but it's more of like a clean energy play. And I think
future of energy.
Yeah, so, and I think that like they're, like, again, I think that they're like the NVIDIA of solar energy. And get them when they're down, right? Let's talk about your last two. Let's talk about Edison.
Edison, yes.
Edison is up for the year a little bit. Yeah,
a little bit. Yeah, well, it's a utility, so it's not gonna be making too much money. Part of the reason that I did pick it is because it's one of the few that is actually kind of gaining, essentially. Yeah, if you look at the 5-year and the 10-year, they are up a decent amount. I mean, it's not like tech or anything like that where you're making record profits or anything. Right. But it's a solid stock. It's utilities. Everyone needs utilities pretty much all the time.
Yep.
So like you're always going to need utilities, and this is a sector that doesn't really make a lot of money. Like I don't hear anyone really talking about investing in utilities, but you need them year round. It's not cyclical like certain parts of the market are. Right. If you have a recession, it's not like people are going to stop using their utilities. They might reduce a little bit. You still need utilities. So it's one of those like staples of our entire economy that no one really talks about. And that's what I like, is the things that nobody really talks about that are good buys.
Yeah.
And it does have a little bit of appreciation, and it does pay a dividend also, a decent dividend for about 4.2 right now. So that's not bad, especially in the utility sector. I had a hard time picking a utility stock that was profitable, honestly.
Right.
So I had to go and find Edison. And yeah, it's got a decent dividend. It has a decent amount of growth also. It does have 17 years of dividend growth as well. So that's something that I also look for usually.
Yeah.
So I'd say it's a pretty solid stock in the utility sector.
Right.
Probably the only one I'm going to buy in the utility sector also from looking at all the other ones.
It's a defensive play.
Yeah.
That's what it is, right? Yeah.
Yeah, it's definitely not my highest dividend player, definitely not the most growth, but like I said, it's always going to be there. It's just like a nice base, I think. Yeah.
Like when the recession eventually comes, this will be one of your best performing stocks.
Yeah.
Like, it just won't go down. Like,
it just won't go down. Yep.
Yeah. Okay. All right. Your next one, BHP.
Yeah, so they are a materials company, so I'm in the materials sector now, and they operate out of Australia, Europe, China, Japan, India, South Korea, the rest of Asia, North America. So they're kind of all over the place. And they are, it looked like one of the best materials companies that I could find. I know copper had like a big upside a few months ago, and I was looking at some copper companies at that time, and I totally missed it. So then I just started looking to other things. And they do mine copper, silver, zinc, molybdenum, I probably said that horribly, uranium, gold, iron ore. So it's a lot of different materials, and they're a very large company, so that made me kind of feel secure in investing in them as a company, since I don't really know that much about materials, obviously.
Yeah.
And then they do pay a dividend also, so sticking to my guns here, and it's a pretty significant dividend.
Yeah.
8.92% right now, so almost a 9% dividend. Like that's a really, really good dividend. And they don't have that much dividend growth. It's only 2 years, so I don't know if I'll be able to keep that dividend or if that dividend will go up. But I mean, honestly, I don't need it to. It's 9%. It's a pretty hefty dividend already. Like I will take 9%. I'll take 8.5%. Like that's totally fine.
So their dividend, it seems like it's variable. There's some like semi-annual, so they give 2 dividends a year, and then it kind of varies a little bit, and maybe when they make extra cash, they
kind of disperse it a little bit.
Disperse it a little bit.
They seem like they're more of a cash flow machine, honestly. I think that's why people invest in it. That's probably why their dividend is so high, and kind of how they get people to invest.
Yeah.
They are up 10% right now. Over 5 years, they're up a little bit. 10 years, they're up about 15%. So again, they're not really growing, but they are paying a significant dividend. So this is a cash flow machine, and that's kind of why I wanted it, because I'm pretty sure at this point this is my highest paying dividend.
And this thing has been around since forever.
Oh yeah, it's a really old company. Yeah. Yep. So if any company goes out, it's not going to be this one, I don't think.
Wow.
So that kind of was what made me feel secure in it. Like I said, I don't know much about utilities. I don't know much about materials. So I was trying to go for big companies that aren't dying and are paying a good dividend, because that way I know that they can cash flow enough to give me money.
Right. I don't think like the world's needs for materials is going to go down.
Oh yeah, definitely not. And they're in different sectors, like copper. Copper is in wiring. It's in basically all wiring, so we're going to need copper. Also gold. It's not just gold bricks, but you also use gold in a lot of electronics too. I don't think people realize how much gold is in just like this computer, basically, that you need to go into that. And silver and other different things that are used for not just commodities, like when people trade gold and silver and stuff. They're actually used in manufacturing in a lot of things. And as the world goes more towards electricity, as cities and civilizations continue to advance, we're going to need more materials.
Yeah. No, this was an interesting pick.
Yeah, definitely interesting.
I don't know enough about this to comment on how good of a or bad it is. It seems like it's an interesting one.
Yeah, it's definitely interesting. Again, like I said, I don't think I know that much about the materials sector or the utilities sector. They seemed like the best two companies that I could come up with from my research. Basically, is why I went with them. I felt kind of secure in them. There were higher dividend paying ones. There were companies that were growing more, but they seemed more risky, and I don't really want that, especially in a sector that I don't know that much about.
Right. Okay. All right. Well, those were our last couple picks, and so far we've invested $19,000 into this. I think it's been a little bit of a down week for us, but we're not investing for the week. So hopefully by the end of the year, we'll get something out of this.
Or at least my dividends will pay out.
All right. Please like and subscribe if you like what we're doing. And I guess that's it for this one, right? Till next time, guys. Bye.
Bye.